All right, if you're buying a home in Texas, there's a moment where things start feeling very real. You find the house, you get excited, and then suddenly your realtor asks you, what terms do you want to offer? Terms like option fee, earnest money, seller concessions, appraisal contingency, and non realty item addendums. And it can feel like reading another language. But here's the thing, understanding these terms can literally save you thousands of dollars, protect your deposit, and even help you win in multiple offer situations. And one of the biggest mistakes buyers make is focusing only on the purchase price while completely missing the other contract terms that can make or break a deal. So in this video, I'm going to walk you through the major terms in a Texas real estate contract in plain English, what they mean, how they work, and what buyers need to know before submitting an offer. And make sure to stick around until the end because I'm going to explain how buyers sometimes accidentally weaken their offer without realizing it. I'm Zach Fines with Fines Realty Group, your local real estate expert, and the purpose of this channel is to be your number one resource for all things Abilene and the local real estate market. So like this video, subscribe to our channel, and leave us a comment with any questions we can answer. And to get connected to me and my team, you can text me directly or fill out the form in the description below. So let's start with the obvious one, the purchase price. This is simply the amount you're offering to buy the home for, but there's usually more strategy involved than buyers realize. A lot of people think negotiations are only about offering below asking price, but sellers are typically looking at the full picture of the offer, not just one number. For example, in competitive markets here in Texas, which we have here in Abilene, some buyers may need to offer at or above asking price depending on inventory and demand. And another important part of this conversation is your down payment. Your down payment is not extra money on top of the purchase price. It's simply your portion of the purchase while the lender finances the remaining amount. So for example, if you're purchasing a $300,000 home with 5% down payment, that would be $15,000 of down payment, and your lender would be financing the remaining $285,000 after your down payment is paid. Next, let's talk about seller concessions. This is when a buyer asks the seller to contribute money towards their closing costs. Closing costs can include lender fees, title fees, prepaid taxes and insurance, and other costs associated with the purchase. For example, maybe a buyer offers full price on a home but asks the seller for $5,000 towards their closing costs to help reduce the amount of cash needed when purchasing the home. Now, depending on the market, asking for concessions may or may not affect how competitive your offer is. In slower markets, sellers are often more open to helping with closing costs. However, in the market we have today, very competitive, buyers sometimes reduce concessions or increase the purchase price to offset the concessions request to make their offer stronger. Now, let's talk about one of the most Texas-specific parts of our contracts, the option fee. I've seen this be anywhere from $50 to $300, although it varies depending on the property and market condition. This is money paid after the contract is accepted within 3 days after that gives the buyer the unrestricted right to terminate the contract during this option period. In simple terms, this gives you time to inspect the home and decide if you still want to move forward. If you terminate during the option period, you do not get the option fee back, but you can generally recover your earnest money. So let's talk about the option period, which is essentially the inspection period. It's the amount of time the buyer has to inspect the property and negotiate repairs. I've seen this be between 3 and 14 days most times. It depends on what's negotiated. During this time frame, buyers schedule inspections, review reports, get extra things looked at, and decide whether they want to move forward, negotiate repairs, ask for credits, or terminate the contract. This is one of the most important periods of the transaction because once the option period ends, terminating the contract becomes much more difficult without risking the earnest money. Next, let's talk about what the earnest money deposit is. It is essentially a good faith deposit showing the seller you are serious about purchasing the home. In many price ranges around Abilene and in Texas, this is commonly around 1% of the purchase price. although again, this can vary. This money gets deposited with the title company after the contract is accepted. Now here's the important part buyers need to understand. If you terminate during the option period, you typically receive your earnest money back. But if you terminate after the option period without another contingency protecting you, you could lose that earnest money. This is why contract timelines and deadlines matter so much in a real estate transaction. Another item buyers may ask for is a residential service contract, also known as a home warranty plan. This is where the seller contributes toward a home warranty plan, most times for a year, that may help cover certain repairs or replacements on systems and appliances after closing. For first-time buyers especially, this can provide a peace of mind during that first year of ownership. Now, home warranties do not cover everything, and every plan is different, but many buyers still appreciate having that added protection. If it is a new construction home, this is not the warranty that you'd be getting. You would be getting a specific builder-provided builder's warranty. Now let's talk about an addendum. One addendum buyers should absolutely understand is the non-realty items addendum. This is used when personal property is being included in the sale that is not permanently attached to the home. This is things like refrigerators, washer and dryers, TV mounts, hot tubs, saunas, outdoor furniture, security cameras, play sets, etc. These items are considered personal property unless specifically written into the contract. And this is important because buyers are often surprised when certain items disappear before closing simply because they were never included in writing. In real estate, if it's not in writing, you generally cannot assume it stays. Finally, let's talk about the closing date. This is the agreed upon date that ownership officially transfers from the seller to the buyer. Most finance transactions are commonly around 30 days from the accepted contract date, but timelines can absolutely vary depending on financing, repairs, title work, or the needs of the buyer and the seller. Everything in real estate is negotiable as long as both parties agree. Now let's talk about contingencies, starting with the appraisal contingency. A contingency is basically a protection written into the contract that allows certain conditions to be met before the transaction fully moves forward. The appraisal contingency protects the buyer if the home appraises for less than the agreed upon purchase price or repairs are needed that can't be covered. For example, maybe a buyer offers $350,000 for a home, but the appraisal only comes back at $335,000. Since lenders typically loan based on the appraised value and not the contract price, there could suddenly be a gap between what the bank is willing to lend and what the seller wants for the property. At that point, the buyer and seller may renegotiate. The buyer may bring additional cash, or depending on how the contract is structured, the buyer may have the ability to terminate and keep their earnest money. This becomes especially important in competitive markets where buyers are offering aggressively to win homes. Another contingency buyers sometimes use is the for sale of other property contingency. This is when the buyer needs to sell their current home before purchasing the next one. In simple terms, the buyer is saying, I want to buy your home, but I need my current home to sell first. This can protect buyers from owning two homes at once or becoming financially stretched. Now, in a slower market, sellers may be more open to accepting these contingencies, but in a highly competitive market, these offers are often viewed as weaker because the seller is waiting on another transaction to happen first. When I present offers with this contingency, the listing agent typically asks me a few things. Is the home listed? Is it under contract? Is it past the inspection period? And is it past the appraisal? That's why many buyers choose to get their current home listed or even under contract before making offers on other properties. Another term is the title insurance policy, which would be the buyer's policy, and a new survey, which lender typically requires. Those two items, I typically see the seller cover that cost. However, if a buyer takes on those costs, that could really make their offer stand out from the rest. Now, remember earlier when I mentioned buyers sometimes weaken their offer without realizing it. One of the biggest mistakes buyers make is focusing only on price while ignoring how all the other terms affect the overall strength of the offer. For example, maybe one buyer offers slightly more money but asks for large closing costs, long timelines, multiple contingencies, and extensive repairs. Meanwhile, another buyer offers slightly less but with cleaner terms and fewer complications. Sometimes the cleaner offer wins, and that's why strategy matters so much when writing contracts. And honestly, this is one of the biggest reasons having a good realtor matters during the process. A good realtor should help you understand not just the house itself, but also the strategy behind writing a competitive offer while still protecting yourself legally and financially through the transaction. And if you want to continue learning about buying a home here in Abilene, Texas, make sure to check out this video about the current market, and I'll see you there.